What 22 plus years of closing deals has taught me. Hey, I'm Clem Satterfield in Cottage Realty. I've been a licensed realtor here in North Carolina for 22 plus years, closed more than 200 transactions, over $33 million in sales. In that time, I've sat across the table from just about every kind of lender there is. So today, I want to break down something almost every buyer asks me: bank or credit union? Let's get into it. The basic difference. Here is the core difference. Banks are for profit. They are owned by shareholders, and their job is to make their shareholders happy. Credit unions are member owned, not for profit corporation. When they make money, it doesn't go to outside investors. It goes back to you, the member, as lower loan rates, better savings yields, and fewer fees. Here's what most people don't always know: your money is just as safe either way. Banks are insured for the FDIC, credit unions by the NCUA, both up to $250,000 per account. So, safety isn't the differentiator. Price and service are mortgage rates. Let's talk about mortgage because that's where I live every day. Right now, in early July 2026, the national average on a 30-year fixed is right around 6.5%. But here's the interesting part: credit unions are routinely coming in anywhere from a quarter point to a half a point below the big banks on the same loan. On a $400,000 loan, the gap can save a buyer over $100 a month and tens of thousands of dollars over the life of the loan. Why? Well, same reason as before: lower overhead, no shareholders. So please, the savings gets passed to the borrower. Now, the trade-off: credit unions don't always carry every loan program. If you need a VA loan, a USDA loan, or a jumbo, a big national bank might have more variety on the shelf. Savings, CDs, and money market accounts. Now, let's flip to the savings side. The national average on a plain savings account right now is under 1%. Some data puts it as low as 3/8 of a hundredths of a percent. That's basically nothing. But high yield savings accounts, a lot of them at credit unions or online banks, are paying around 4% right now. CDs are similar. You'll find credit unions offering 4%, sometimes north of 5% on a 1 year CD, competitive with or better than most national banks. Money market accounts, same story. The best rates right now cluster around 3 to 4%. And it's the credit unions and online first banks leading that pack, not the big brick and mortar names. Okay, now checking accounts. And checking accounts, this is where I hear the most frustration from clients. Big banks often want you to keep a minimum amount on the account, anywhere from $100 up to $1,000, or hit a certain number of direct deposits just to avoid a monthly fee. Credit unions, more often than not, just give you free checking, no minimum, no monthly fee. That data backs this up. Credit union members pay less than half in checking fees each year compared to bank customers. On average, okay, now broker versus single firm loan officer. There's one more piece I want every buyer to understand because it trips people up constantly. The difference between a mortgage broker and a loan officer at a single firm. A broker works for you. They shop your loan services. They look across multiple lenders, banks, credit unions, and even wholesale lenders and bring back the best combination of a rate and terms. They're usually paid by the lender, not you. So it doesn't really cost you extra to have someone shopping on your behalf. A loan officer at a single bank or credit union can only offer you the one institution's products. Sometimes that's great. If you already bank there, you might get what's called a relationship pricing, but you're only seeing one menu, not the whole restaurant. Now, in my experience, a local loan officer can be an advantage in time. Sometimes a local respected single firm officer can quickly make contact with the right person to resolve most issues. So here's the bottom line. It's not that banks are bad or credit unions are perfect. They're just built differently, and that shapes what they can offer you. My advice is number one, look at location, service. The proximity of the institution is important for both time and convenience, and customer service matters. Number two, features, current mortgage rates, special products, minimums or other penalties. Number three, features, check deposits from off-site, current interest on CDs, money markets, mortgages are helpful when choosing a brick and mortar bank, a credit union, or an online bank. If you're having or any thoughts of buying or selling a home and you want someone who will walk you through every step of the way before you sign, that's what I do. Let's talk with no pressure, okay? Just your best strategy. Thank you.